Welcome back, everyone. In the aftermath of President-elect Donald Trump's election win, economists and policy experts are figuring out how this is going to affect your wallets. Financial advisor Mark Pancratz with Axiom Wealth Management joins us now. Thanks for coming in.
Thanks so much for having me.
Okay, here we have some breaking news. Within the last hour or so, the Federal Reserve cut interest rates by 1/4 percentage point 2 days after the election. So what does this say to you?
I think there's going to be some short-term relief for people that were concerned about spending. You know, if they're buying a house, they're getting a car, your interest rates are coming down a little bit. But that's what the Fed has said that they're going to do. They're going to lower these interest rates to try to help with spending in the economy.
All right. The stock market tends to go up once we know the winner of an election because we know who the next person will be in office. But have there been any signals over the past 2 days about what the Trump administration means for Wall Street?
Yeah, well you're right. The stock market does not like uncertainty. And when you're going through an election, there's a lot of uncertainty as who's going to win, especially in this election. And so once Trump was announced, and the addition to what happened in the House and the Senate, with some of that being flipped, you saw the market respond very favorably. I think Trump's conversations around wanting to be pro-America, pro-business, pro-energy, you see a really uptick in the market. And the S&P 500 will probably continue to do well. I think you'll also see opportunities in that small cap space of American small cap, American mid cap that's not quite recovered from what happened after COVID.
Okay. All right. Very good. We were wondering about that. We're also getting a lot of questions from you about your 401k. What should people do right now, if anything?
Well, what we oftentimes see is that people operate financially off of emotion. And so one, it's taking a step back and not letting emotion dictate what you're going to do, whether it's drastic changes in how your money's managed or where you're investing it, right? Elon being a part of Trump's team, all of a sudden Tesla had a big boom. Well, don't all of a sudden just start going and buying things that you're excited about. So being well diversified, making the right adjustments, looking at the overall financial picture. And one thing for those that may be a little bit younger with time to invest, really evaluate the Roth aspect of your 401k. If you have that Roth option, because that money grows tax-free, that's a great thing that you can do to help your retirement picture look better.
And talk with an expert, too, to get some advice. And we're almost out of time, but I want to talk about tariffs. The first Trump administration instituted about $300 million in tariffs on some select Chinese imported goods, which were left in place by the Biden team. Now we're looking at a much broader range of tariffs on all imported goods and an increase on those Chinese goods. A lot of economists say that's going to lead to inflation. What do you say about this?
Well, it probably will. In a bubble, it will, right? Because if you add a tariff to a company, they're just going to pass that expense down to the consumer. Right. Whether the consumer buys the thing from China and pays more, or they go to a more expensive American-made product, inflation is going to be there. But with this administration, they've talked about some of the cutting back on government spending. What do they do in the healthcare space to reduce some spending? So there may be aspects where inflation is up, but if you look at the macro perspective, we don't think inflation will continue to be as high. And one quick other reminder, inflation is good to a level, right? 3% inflation has been about where we're at. So some level of inflation is good for the economy.
We'll leave it at that. All right. Until next time.
Thank you so much.
Thank you so much for being with us.